Hi everyone, today we will discuss Q3 FY19 performance of ICICI Bank. Q3 earnings of ICICI Bank strengthens our belief that bank is well on track on multiple fronts to deliver its targeted returns by June 2020. In Q3, ICICI Bank delivered a healthy performance with core pre-provision operating profit increasing by 14% on a year-on-year basis. However, rise in provisions led to muted net profit performance. In terms of asset quality, because bulk of the problem assets were already recognized in FY18 and in Q1 FY19, the slippages or the gross additions to net non-performing assets continued a downward trend. However, our enthusiasm for the bank is not just limited to the receding asset quality. There are more reasons that makes us decisively positive on the stock. So let's look at the key positives from ICICI Bank's Q3 earnings. The first is that the bank reported a healthy growth in advances book which came in at 12% on a year-on-year basis. The growth in domestic advances was very healthy at 14%, which was partially offset by degrowth in the international book. The bank's focus on retail assets enabled it to grow its advances book in line with the system. Retail assets grew by almost 22% on a year-on-year basis. Margins, that is net interest margins, improved to 3.4% during the quarter, which is 7 basis points improvement on a sequential basis. The margin improvement came mainly because of the margin expansion on the international book, while the margins on the domestic book continued to be almost stable at 3.7%. Fee income growth was also very healthy at 16%, mainly contributed by retail fees, which now constitutes around 73% of total fees. The key highlight of the quarter was a significant improvement in the provision coverage ratio to 68%, which was almost 950 basis points improvement on a sequential basis. Now, this is much faster than anticipated acceleration in the bank's earlier stated objective to achieve the provision coverage ratio of 70% by June 2020. The slippages to non-performing assets declined, and thanks to that and high provisions, net NPA came in at around 2.6%, which is a decline from 3.6% reported last quarter. So on the negative side, there was not much except one thing, that CASA ratio dipped marginally to 49%, and that was mainly because the growth in CASA deposit lagged the growth in term deposits. So what's the outlook on the stock? In May last year, bank's management had articulated its strategy to achieve consolidated return on equity of 15% while improving net non-performing asset below 1.5% and maintaining provision coverage ratio above 70% by June 2020. With potential improvement in return ratios, the current valuation of the bank with the core book trading at 1.5 times FY20 price to book looks very compelling. In fact, on a relative basis also, the stock of ICICI Bank is trading at 30 to 40% discount relative to its peer having a similar asset quality issue. The indictment of the former CEO of the bank does not alter the growth path. In fact, the Q3 earnings indicate a very clear sky for the bank, making ICICI Bank an exciting yet a relatively safe investment bet for long term. Thanks a lot. That's it from my side. For more news and updates, log on to moneycontrol.com.